So, like I said, this is Derivology day one, and we'll be looking at how to make Deriv cry, right? For bulk of us, Deriv has made us cry. Deriv has made us cry. I was sending my team the chat of somebody who said, "I've lost my 5K," and what's all was all it has happened basically. So now it's time for you to make the roof cry. That when you make a withdrawal, the roof should be scared. I remember one of my forex big men. He made a withdrawal of $1 million last 2 days, right? I was looking. I said, the brokers of this man, they are going to be under tension because they have to pay out 505 million naira at once. That's a lot of money, but it can happen to anybody, right? So let's get straight into what we have for today, right? Okay. Now, a few words. I always like to start with this before trading or before any training that I'm doing. And why is that so? Because people have gone through a lot in life, right? And in they are going through a lot in life, the way Forex is portrayed to them just makes it. How many of you had Forex portrayed to you like that? Just come in by tomorrow, come for a 3-day webinar by tomorrow. Your life has changed, or by Sunday evening, your life has changed. By Monday, you buy Benz. By Tuesday, you beat Dangote. By Wednesday, Elon Musk is your competition. If it was like that, do you think Elon Musk could be the richest man? It's not going to happen. Right. So the first thing I would like to always emphasize is that trading is a skill, i.e., it takes time, energy, and patience to learn. I don't know if that makes sense to you guys. I would like to start from there. Trading is a skill. Therefore, it takes energy, time, and patience to learn, right? And like every other skill, you will get better in the skill to the degree to which you give attention to learning the skill. I'll say that again. You will get better in the skill to the degree to which you give attention to learning the skill. I hear people ask me strange questions like, how long will it take for me to learn how to trade? I say, you determine. You can determine to learn how to trade in a month, in 2 months. It's all a game of your consistent giving attention to it. So that's where I want to start from. So it's a skill, right? So it's not, you're not here for a babalawo, I'm not an infar priest or something, right? That by Sunday evening you have become a billionaire. No, it's not going to happen like that, right? And obviously it's not a get rich quick scheme. Trading can get you rich quick, but it's not a get rich quick scheme. Did you hear what I said? Trading can get you rich quick, but it's not a get rich quick scheme. Does that make sense? That's super duper important. So laying those basic foundations. For people that don't know me, I'm not assuming everybody. Many years ago, I almost gave up, and this is not the first time you're probably seeing this picture. If you're on this call with me, and you're a student of mine, and I've said my encounter many times, which I always like to start with again. How I'd created this thing and I'd been broke consistently because I would not listen to instruction, right? So I'd given up. It is over. And my upline then sent me a webinar poster. I said I should come to Sheraton. Is it Sheraton? Yeah, I think it was Sheraton. So I went there and I didn't really hear anything they said. But Mr. Can you guys hear me? Trade Bolu team, please confirm the sound to me, guys. I think the network broke. Bolu, are you with me? Can you hear me? Though my team is on the call, they are fully following through. I know you guys can't type, but they are reaching me constantly with feedback. So talk to me, guys. Can you hear me? Okay, that's amazing. All right. So back to what I was saying. So I'm saying I almost gave up, and I went for that seminar, and he said something. He said, if you rented a shop, right, and you were to sell a product there, and that product didn't sell for 1 year. Are you hearing what I'm saying? He said, will you close your shop and go back and ask your landlord for the balance of the rent? He said the same thing with Forex. A lot of people give up too easily because they have options. And that's where I'm going to start from today. A lot of us have too many options to be focused on one thing. And that's where the challenge comes, because at the slightest encounter of a challenge, we give up. Are you hearing me, guys? And that's where I want to start from. If you are going to succeed, not just in Forex, in anything, you are going to pay attention to it, right? There's a 10,000 hour rule that if you give 10,000 hours of your time and attention to anything, you become a master in it. One of the statements I made while I was coaching somewhere was, the reason why some of you are nowhere is because you are everywhere. You have done crypto, you have done Forex, all the Forex trainers, you are following them, you know all the strategies, you know all the, pay attention to one thing and learn it well, umba. And that's the reason for the failure, right? So I met David Imonite, you can look him up on Google, right? And he said those words to me, and I made up my mind. Is either I make it in Forex or I die on the road to making it with Forex. I don't I don't know if you hear what I'm saying. That's how I made up my mind. Right? I said it's either I make it in Forex or I die on the road to make it. Wasn't too often that I fail. Does that make sense, guys? So let's move on, right? So let's move on straight to our next, right? So I'd like to tell a last story before we go straight into our content for today. Why am I telling you all these stories? If it was going to be easy, you wouldn't need me to tell you all this. It is not, right? It's not going to be easy. Very important. It is not going to be easy, right? I remember days when, they will look at me and, they will say things like, what business are you doing? Forex. I'm like, no. What do you do? What do you do apart from Forex? As do Forex traders are wasting our lives. You don't have any, and it's a very big lie. Even nowadays, I have to say it. I say, I'm a full-time Forex trader. That's how I tell myself. Right? So I don't know if you heard the story about 3 feet away from gold. It's a story that was told us by Napoleon Hill. And what happened here was during the gold rush, right, I think it was in Colorado, everybody was mining gold because, it was just a discovery of gold, basically. And as they were mining, there's a particular guy, if I'm not mistaken, I think he bought machinery to mine. And when he began to mine, he got to a point he couldn't get gold. Then he sold the machinery for a few hundreds of dollars, if I'm not mistaken about this story. And the person he sold it to, and I think the land, I'm not sure, the person he sold it to went to ask, I don't know if he's a geologist or somebody who knows about, how to calculate mining, whatever. And once he did that, he came back and they told him that the gold you are looking for is just 3 feet away. And they took the machinery that they bought, and they headed for the ground. And guess what? Gold was just 3 feet from where they are. The other guy was so close to his life being changed. But guess what? He didn't have the right advice, and he didn't have, the tenacity. A lot of us have tried, but we have not tried enough, or we are trying with the wrong direction. And that's why mentorship is vital, right? So I like to say, perhaps you have, you've gone through a lot in Forex, right? And I'm sure a lot of us have gone through a lot. I was saying it jokingly I think I was talking to somebody and I was saying, For most people, once they can't learn forex, the next thing is to bring out a course. We didn't bring out our course like that. I've trained over 250 students, and our course is not brought out like that, right? So let's move on into the business for today. So there are three things. I've had a general introduction with you guys, and then the next thing is I'll be talking about the concept of smart money versus retail trading. Then I'll be talking about basic market structure, right? And don't assume you know what I'm about to talk about. And then I'll be talking about the market reversal zones, order blocks. I see some of my professional course students like, Sabi, is this all you are teaching? Why are we now on this call? They've gone far deep. And I'm talking about liquidity grabs and mitigations. And I'll talk about liquidity grabs plus MRCs plus mitigations. And I'll talk about IOFs. Then I'll talk about proactive trading versus reactive trading and what kind of trading. So there's a light green line in between all of them, right? So this top portion is what we will deal with today. I'm targeting our webinars to be 40 minutes, right? Not too long and, super detailed. The middle lines will be for tomorrow. And then the third lines will be for the third day, right? So like I said, this is not a clickbait webinar. We are literally going to train all through in this webinar. So let's move on, right? So before we go, why deriv and why synthetics? Number one, you don't need any verification until, if I'm not mistaken, again, I don't know if they've updated this, but until $10,000 withdrawal, right? You can trade deriv 247. You don't need any fundamental analysis, right? So it's not affected. Please pardon my typo. It's not affected by the news, and there is no sentiment analysis involved, right? So you don't have to do. Some don't even know what sentiment analysis is. Like, what's that sentiment? Well, they are traders and they are full-time traders. That's all I'll say. And you only need to learn technical analysis, right? So a good technical analyst will trade deriv properly. And deriv is regulated. I hear people say things. Now, I don't work in deriv, never been around there, but it's just logical. People say things like, when people I don't know how to trade, they start saying things like deriv is manipulating, and it's just logical. If they catch them manipulating, how much they are going to lose is far worth more than your $1,000. In fact, your $10,000 is not part of what they're going to find them, right? So, the cost of not being pure is far more than all of that, right? So for me, I really do not believe in all of that stuff that they say deriv is manipulating. I just believe you can't trade. Go and learn how to trade. Right, so that's it basically where I have to start from, right? So deriv is regulated, and they've been on for, if I'm not mistaken, again, 21 years, since 2000. So why would they want to spoil their reputation because of some $5,000 thereabouts, right? So super duper important, right? This is why, deriv is an amazing synthetics trade, right? So if you don't know how to get started, just put this link in your browser, bit.ly/start deriv. And once you get there, you get to deriv website, sign up, and voila, you can start trading synthetic indices. Are we fine? Can we go on? Amazing, right? Okay, so let's move on. Day one, the concept of smart money versus retail trading. So what's the difference really? Smart money, retail, what's actually the difference, right? It's something to ask yourself, right? And how did it come about? I don't teach patterns alone. I teach concepts. The why we are doing it is important. I've said this before. Motive. I'm hearing someone complain about sound. Please check that up and verify to me that everyone can hear. I'll wait for that confirmation. Once I get that confirmation, I'll move on. Hello guys, are you with me? Give me a confirmation if you can hear me loud and clear. Okay. The confirmation from the team is that we can go, right? So like I said, seeing that we're not exceeding 100 today, I don't know whether to have faith or not to have faith that will also not exceed 100. And I don't know if that's good faith. My team will be looking at me like, sir, what kind of faith is that? But if you don't, we'll just move to Zoom so we can have your comments, right? But when we're done doing our question and answer, we'll have people unmuted to ask questions and we can fly, right? So like I was saying, what's it about smart money versus retail trading? Right? So let's start from there. You see, when you hear retail traders, you hear stuff like what? Support and resistance. When it breaks the support, buy it. Ah, that's bad. You hear stuff like trend lines, when at the third bounce. I remember back then reading a book on is someone talking to okay. I remember reading a book. So at the first bounce, second bounce, by the time you hit the third bounce, the trend line is weak, all those kind of things, those analysis, right? Or I hear things like when the trend line is sloppy, right? It's weak, so it can't go long, right? In the trend line that's not too sloppy, right? The less sloppy it is, the more touches that will be required for it to be broken. And now that I'm understanding trading from a concept perspective, all this stuff makes sense, right? So you get to hear things like that, support and resistance. Where you hear what's wrong with this bar? Give me a second, guys. So you hear support and resistance. You hear things like I'm trying to get change this. So you get to hear things like the market is moving in between two zones, and you have a support. What do they call this one? This one is resistance now. This one is support. We were once it gets to this place and breaks, for some people they tell you to jump in. For some people say you wait for a test, right? And then you jump in and all of that, right? Support and resistance. They say when a support breaks or resistance breaks, it turns to support. So if a ceiling turns to a floor, how come I'm not talking now? If what I'm saying you don't understand it, then you need to go through my basic course. Okay. So what was that? So support turns to resistance and all that. That's what you hear. I will have chart patterns. Chart patterns were raining. I remember when I did a very serious study on chart patterns, right? So when you see things like I don't know if you guys learned with concepts, but I really train with concepts. Right. So when you see an ascending triangle, what does it mean? It means that the market is losing, the buyers are gaining momentum, sellers are losing. So that's why they can't really go down. Then they break through, or you see something like all those sharp patterns. You see the heads and the shoulders pattern, right? Once it breaks the neck, it's time to enter, right? Or you wait for a retest, and then it flies down. And then the candlesticks patterns, the dojis, the engulfing, the morning star, all of those things. Those amazing patterns. I wish we were on a Zoom call. Maybe tomorrow, like I said, we'll work with Zoom because I want to get your responses. All of you that maybe did the chat patterns and all that. So this is my question for you. It's something to think about. I already here for a reason. So how do you think? You think the banks and the hedge funds, that's the guys that control the market. How do you think they do? They sit down in their offices and then they ask their what do they call it? Maybe they are, I don't know, whatever. I don't know how to trade. And then they ask them, maybe his name is Tunde. Chart pattern. Is it complete? Oh yeah, put 1 billion on the line. You think that's how they do it? Or they look at Chinyere, please. Oh yeah, the neck of the trend line is about to break. Get $2 billion. I hope you know that it takes 10,000 lot sizes to move the market. Some of you that don't understand what I'm saying, this is not a training webinar for beginners. Go to tradewithbolu.com and check for the basic course if you don't know what I'm talking about. 10,000 lot sizes to move the market by one pip, right? And so it's just logical. That's how I would choose to move the market is by using I'll be using support and resistance. When it breaks, I'll put $2 billion on the line. They would have arrested me by now. Does that make sense, right? So, can you trade like this? The funny part is, yes, you can actually trade like that because there's actually concepts behind and there's logic behind it. And in a way, you're actually indirectly trading smart money, right? If you know how to do this properly, right? But the truth is that except you are exceptionally good and disciplined, there's only a limit to which you can make progress trading like this. I don't know if that makes sense. Okay, that's amazing, right? So I mean, some people say, where can I learn this? Now the truth is we've got you covered. I have a full course, advanced course, and pay attention. Wait, usually this is the end of the webinar or most webinars, and I've told you we're going to train you, right? When you show you courses, I knew it. You wanted to show us his course, and that's it. 1,000 times no. We are training. So rest. Does that make sense, right? So, like I said, we have thoroughly explained concepts, lifetime mentorship, and our course is different. When you pay for a normal course, what you realize is that they just throw some bunch of videos in your face and save you. But that's not how we train. When you come in, right, the first thing you do is once you go through signups and everything, then you go through lecture one. Then you have to do tasks. Then you have instructors. When you finish your lecture one, you will send your tasks to them. They would mark it, correct you if need be, right? So you are literally handheld through our course. I can boastfully say I don't think there's any Forex course that trains you like that, right? So our training is far, far different than the average training, right? So we teach in depth on retail trading concepts and how you can go through, right? So the prices out there if you're looking to sign up, but if you're on this webinar, I'll be giving you a 20% discount, right? When you get to your checkout page, use the keyword Derivology and it lasts for just this period, right? So you can log on to tradebolu.com and check out the courses. Click on the advanced courses and you choose what you want basically, and then you can move, right? So like I've told you, we train differently. We check you, we don't just throw you into the atmosphere. And guess what? All of these are your own pace. So I hear people say, I'm working, it's fine, we're patient. Right? So does that make sense? Right? So you can use the coupon Derivology upon your checkout to pay, and you get a 20% discount just for this period, right? So like I said, there is a webinar and I'm actually teaching you. This is not a clickbait webinar, guys. So can we go on? Let me just get a feedback from my team that the sound is okay and fine. So let's go on. Team, speak to me. Are we fine to move on? Are we fine to move on, guys? Once I get that feedback, I'm going to teach on. Okay, okay. Right. So okay. Let's go. So like I said, this is not a clickbait webinar. We're going to teach, right? So when you come to institutional traders, you got to start hearing things like mitigation, fair value gaps, order blocks, trap zones, Wyckoff, and all those things. And some of you are like, my goodness, what on earth are all of this? Right? And then that's why I started with saying Forex is not a gift, it's a skill. You can learn it, right? Trap zones, liquidity grab, and all of that. And I'm going to explain all of that, right? By the end of this webinar, when they are talking about mitigation, you can pull mouths now, right? Because you're going to know, what it means, right? So let's move on, right? So today I'm going to basically look up the basics. Why? I'm not going to assume that everybody knows the basics. I could do that and fly, but I'm not going to do that. I'm going to assume, I'm not going to assume that everybody knows the basics, right? So the market is always doing three things. If you plan to write, now be an amazing time to start doing so. Like I said, this is basic market structure. In the pro course, I teach the fractal market structure, HTF, LTF, HTF, and LTF alignment, and all of that. But this is a webinar. I can't do all of that here, right? So like I said, this is a basic market structure. The market is always doing three things, right? Whatever goes up must come down. I hope that makes sense, right? Okay, so I have some markups here. I'm trying to open my chart for you. Okay, I have a lot of markups here. Give me a second, it's loading. Okay. Okay. So I'm just gonna switch my screen now to my trade with Bolu team. Can you guys see? Can you guys share? Let me know. Let me know. Once you can see and hear, let me know. So I'll just keep on. Right? I'll wait for that response. Okay, that's amazing, right? So the market is always doing three things. Always, every single time, the market is not doing any other thing. Well, maybe apart from this kind of markets, actually, it's doing two things. It's actually ranging, and then we have the impulsive move. But basically, the market is always doing two things, like I said. Does that make sense? Three things, right? It's either an uptrend, or it's going to be in a ranging market, or it's going to be in a downtrend. Now, listen, how I teach, I don't just teach up. Why? I always like to emphasize on learning concepts, not just learning, patterns, right? Because you won't understand why you are doing what you are doing. So the question is, why does the market move like that? And it's just logical. Let's go back to my PowerPoint slides. I like training with concepts, like I said. So now, why is the market always going in an uptrend, downtrend, ranging market? Why can't the market go up forever? Have you thought about it? Why can't there just be a pair? In general terms, I mean, like, why can't it be that the low? Let me explain what I'm saying. Maybe I'm going ahead of myself. So we have a higher high. Like I said, if you don't know what the higher high is and higher low is, go to tradewithbolu.com and take our basic course. It's just 100% free. I did a 7-day full webinar explaining all of these things there. So have that course. So we have a higher high, right? We have a higher low here. We have a higher high, okay, and then we have a higher low. And you see all of that, and then you have a higher high. Once you find out that the highs of the market are consistently being taken out, then you are in an uptrend. And then the lows of the market are consistently being taken out, you are what? In an uptrend. Does that make sense? So you have higher highs and what? Higher lows. And for a downtrend, like, your guess is as good as mine. We're 2 minutes out of schedule today. Sorry, we started a bit late. We want to ensure that our webinars are 45 minutes per day, so it's not too long. I hope that's fine, guys. So I'll be ending soon. If you've checked our content for today, this is what we'll be dealing with. And then tomorrow we go deep into what we have. So we have lower lows, lower lows. So we have a lower high, right? And then a lower low, lower high. There should be a text feature here. Maybe I'll look it up later. Lower low and lower high, and like that, and like that. So once you see the market making series of lower highs and lower lows, then we are in a what? In a downtrend. Does that make sense? Amazing. Now, and I'm going to explain why the market goes like that. Well, I don't think I have that time again. Now, when we have a ranging market, it's not going up, it's not going down, it's just in between, like a range, right? So this is the range of them. It's just up, down, right? So let's quickly jump onto the chart and see some examples of what I'm talking about. Let's quickly see some examples of what I'm talking about, and then we'll go straight into business from tomorrow. So please let the team confirm from me. You should be seeing my screen now. Okay, thank you. So it's really this simple. Let's look for. Okay, amazing. So when you look here, what do you see? This line I'm drawing. Oh, I have markups on my chart safe. Anyway, can you see higher high? Let's draw it together. We have a higher low. We have a higher high. We have a higher low. We have a higher high. We have a higher low, and all the way up there. So we're in an uptrend. But by the time it came here, what do you realize? We have a lower high here and a lower low. Can you see this? And a lower high. And what do you see? A lower low. So we have a what? A downtrend. Does that make sense, guys? Are you with me? That's quite easy, right? Okay. So now, where do we have a ranging market? Usually you see this on lower time frames. So when we have a ranging market, we just have the market seeming to go in between two. Should I use the word two ranges? I don't know if that makes sense in definition. Right? It's not exactly going up or going down. It's just between two ranges. And usually, like I'll say, maybe not perfectly, but you can usually draw a box around the ranging market. So can you see this? Exactly. Not so perfect. You never get perfect stuff in the market. You can see that this market is ranging. Does that make sense? Ranging market. You see this? Ranging markets. Exactly. So this is what will happen usually, right? And I'll round up with this. This is what will happen. We'll have. I'm trying to share the screen so I could draw. Okay, so this is what happens in the markets. And like I don't really have time to explain why I'm out of time tonight. We have the markets. Let's take out all the ink off this slide. We'll have the markets move in this direction, range, and then move in this direction, and then range, and then move back, range, and all of that, right? So that's basically how the market works. I really wish I had time to distill into the concepts individually, but we're out of today's schedule for this webinar, right? So that just basically explains everything on this slide, right? So I'm just going to stop there today. Remember, I said this is a 3-day webinar. Today is just a basic introduction. Tomorrow, we're going to dive deep into SMC concepts in consonance with Deriv. We're going to see how to do all of that. And at the end of the day, you'll be able to trade basically with SMC. So any questions? Now, there are two ways to ask questions tonight. Pierce, please type your username. Send your questions to that lady. Or I think there's a way to raise up your hand that you want to ask a question. Yes. If there's a way to do that, click it. Right? So I'm just going to wait for about 2 minutes. Okay, so I can see somebody saying he wants to speak. So I've allowed you to speak, sweet Dan. Talk to me, if I'm not mistaken. Was it a mistake or do you actually have a question? Okay, so I don't think it's actually too good. Or does it mean I'm bad? Anyway.
No. I don't have a question. Sorry.
No problem. That's fine. I think I can hear people also. Okay, so I don't think there's anyone that actually does have a question. But if you do, our instructors are up. Right, so that's it basically. And you have an opportunity to be trained and funded by me. Peradventure, you are interested in being trained by me. This webinar continues tomorrow. I always have to say that when I seemingly show products that we offer, this is not the end. We're going to teach you like we promised, right? Professional course, we take you through smart money concepts from beginning all the way to the end, right? And when you're done, you're going to receive a $10,000 funded account from me, right? I'm going to give that to you to trade. And some people ask me why. And I said, because I'm confident. I'm confident in what I'm teaching you, right? So for some people that are, super skeptical, you want to see, let me show you, let's do something together, right? I'm going to show you, okay, amazing. So like I was saying, we're going to pick a random journal from here. I wanted to pick a journal before, but I said, let's pick in the middle of the call. Okay, so now let's take a look at this journal. Where is it? Oh, okay. Okay, there's a slideshow. Let's break this guy. I can't find this. Maybe we should just look it up from here, from the Telegram platform, the Finder. Okay, so now this is the app that we use, myfxtracker.com, and perhaps you don't know, I'm a co-founder in my FX Tracker. Exactly, right? I know if A-Team is on this call, amazing founder, right? So you see how I follow you through? They send their befores and after to me. Can you see before chart? Can you see after? Stop loss 2 pips. You don't understand. If you started trading with $100 and you lost this trade, you're going to lose 2 pips. If you won, you're going to get 91.2 pips. So can you see the kind of trades that are being taken? Right? And these are my students, not me. I want you to see that he took a trade here with a lot size of 5.45. What's his stop loss? 18 pips. His take profit is 496 pips. This is a student. Does that make sense? Right? And there are a lot of them there. If you notice, this is last week to 10th December. So journals are sent weekly and I go through them and I have conversations with them. When I say I'll train you, I don't joke about it, right? Does that make sense? So let's just go back and, we've come to the end practically of this first day of Derivology, right? So I'll just go So like I was saying, sorry. I was saying that for those that didn't hear me, perhaps you want to sleep and earn. We have a very low risk bot for you. It's just about $15 for a year. You can get that and you have your money grow automatically. Ensure you join our vibrant community on Telegram. And like I said, this is not a clickbait webinar. I am going to teach you. Right? So I want to see you guys here tomorrow by 6 p.m. We'll communicate with you whether it's going to be here, whether it's going to be on Zoom. Maybe we'll just take a poll. Right? So thank you guys for joining us today. Connect with us on all our platforms. We're super, super, super active and we'll respond to you. So see you guys tomorrow, same time, 6 p.m. Derivology. Have a great day, right?